Hello traders and welcome back to the Forex Geek. In today's video we're going to be talking about the falling window candlestick pattern, and this is a bearish continuation signal that appears during downtrends. This pattern serves as a clear indicator of potential market direction and helps identify precise entry points for traders. The falling window combines straightforward price action analysis with market psychology, making it a practical tool for your trading arsenal. Stay with me as we break down how to identify this pattern, understand its significance, and implement it effectively in your trading strategy. So let's get started. Let's talk about the characteristics of the pattern. The falling window candlestick pattern is defined by two consecutive bearish candles with a gap between them. This gap or window occurs when the high of the second candle is lower than the low of the first candle. It's a powerful bearish continuation pattern that typically appears during established downtrends. So to identify this pattern, you need to look for the following key characteristics. You need to look for two consecutive bearish candles. Bearish candles could be red or black. In this case, I'm using the red color, so two consecutive red candles. And the second characteristic is a clear price gap between the candles. It should be very clear, and also you could just use the lows instead of the close, the lows and highs of each candle instead of their closing and opening prices. So the third characteristic is the second candle's high is below the first candle's low. So this is very important. You don't want to be seeing the high encroaching into this area. I know this is still a gap, but we need price to be, we need the second candle's high to be below the first candle's low. This shows a clear gap between the two candles. Now the fourth characteristic is both candles should have relatively small bodies compared to their shadows. So they should have smaller bodies compared to the shadows. So this shows that there is enough selling pressure in the market and we should be looking for continued bearish movements. So the falling window pattern indicates strong bearish sentiments. It suggests that sellers are in control and are aggressively pushing prices lower. This pattern often leads to a continuation of the downtrend, making it a valuable tool for identifying potential short entries or exits from long positions. So when you spot a falling window, pay attention to the volume. Typically, you will see increased volume during the formation of this pattern, particularly on the second candle. So let's hop on the charts and look for the falling window pattern. So I have some of them marked out here. This is a clear bearish trend. As you can see, we are clearly bearish. We have this trend line, and you can see the increasing selling pressure here. I'm just gonna add the volume indicator to help us confirm this pattern. So we have the volume indicator. Perfect. Now you can see the first candle. You can see the first candle here, and you can see the second candle below it with the gap between them. You can also see the wicks, above the wicks to body ratio. You can see that the body is small compared to the wicks. Now this is a classic falling window pattern, and it shows that sellers are aggressively pushing prices lower, and we should be looking to key in with this daily time frame. So if you are on the lower, if you are a day trader or you're a scalper, you could just move to the lower time frames and look for opportunities to sell or to short the trade, short the currency pair or the asset at that point in time, because it shows that sellers are aggressively in the market and looking to short. So this is one example. Let's look for another example. We have one here. We have the gap between them, and we look for more examples. This is a pattern that occurs in the market frequently. We have one here, have this gap. Sometimes the market comes back to fill in this gap and continue the trend to the downside. Sometimes we have one here, and we also have one here where price came back to fill the gap. Actually, price came back to fill it twice. One here and one here. So we have lots of examples here. This is another one. We have the gap right here between the first and the second candle. And also you can see the gap here. Also, there's a very big gap. So this is the falling window pattern. The first bearish candle and the second bearish candle, you should have a gap between them. We have a very small gap, very small gap between those two candles. Now, how can you trade with this pattern? How can you trade with the falling window pattern? I've gone over some examples, but let's talk about how you can trade using the falling window pattern. So the most straightforward approach is to enter a short position after the second bearish candle confirms the pattern. So your entry point should be at the open of the next candle following the pattern completion. Now you should know that most people like to trade this pattern on the higher time, like they like to do top-down analysis, whereby they spot this pattern on the higher time frames and scale to the lower time frames to look for entry points or potential price action entry points from there. But if you are entering on the higher time frames, typically you should enter at the close of once the pattern is completely formed, you should enter at the opening of the next candle. But you shouldn't be expecting big risk to reward ratios, so you should just place your stop losses above the high of the first candle. Now this depends on the gap that has been created. If you have a very big gap like this one right here, you just look to place your stop loss at the close. You could just place it at the midpoint of the gap. You just place it at the midpoint of the gap, or you could still place it at the high, but your stop loss is going to be very big. So just place it at the midpoint of the gap and just set your take profits at key support levels like this one, or you could just set your take profit at a 1:2 fixed risk to reward ratio, and that is all right still. So that is how you can trade with the falling window pattern. You can see this is another one. It's another example. Price that are falling and dropping, so you can just place your trades at the next candle here and your stop loss above the high of the first candle. Take profit levels should be 1:2 risk to reward ratio, or you could just target significant support levels like this one right here. Perfect. Or this one. Have this one here. You could also trade set your trailing stop losses to help protect your trades. This is another example, but the gap was a very big one. Had a very big gap here, so we could just place our stop losses at the midpoint of the gap to ensure that we will be able to protect ourselves. So as price hit a 1:1, you could also set your stop losses at break even, set your trades at break even to ensure that trades like this with big stop losses and reversals won't hit your stop loss and end up in a loss. So you could just set your break evens once you have a 1:1 risk to reward ratio hit. So that is how you can trade with the falling window pattern. Personally, I would like to once I see this pattern, I would typically go to the lower time frame. After the pattern is complete, I'll go to the lower time frame to look for selling trades that will enable me to sell. Also, I'd like to look for the gaps, filling of the gaps. So I'd like to trade short positions once price comes back to fill in this gap that the falling window pattern created. So this will enable that I'm entering at appropriate levels and not just entering at the close of the completion of the falling window candlestick pattern. So position sizing is critical. Never risk more than 1% of your trading capital on a single trade. Calculate your position size based on the distance between your entry and your stop loss level. Always check for additional confirmation signals. Look for bearish candlestick patterns, resistance levels, or technical indicators that align with your trade direction. So alright traders, we've come to the end of today's video. Today we explore the falling window candlestick pattern and its significance in identifying bearish trends. If you found this video helpful, please like, subscribe to the channel, and turn on the notification bell so you won't miss any future trading content. Thank you for tuning in, and until next time, happy trading.